and Ron.
On minutes.
Very nice.
And on the screen is Erin Wilson-Collins and Councillor Erin and Councillor Paniora. Well, beaming in from Dargaville.
Good morning, everyone. Hopefully, can you see
Good morning.
I can't see, but that's okay. They can hear you.
Right. Okay, perfect. Right. We'll just do your we'll just go through the formal process, and then we'll bring you in.
Do you want to open the meeting?
Yeah, you can actually open the meeting of the karakia. Thank you, Steve.
Thanks.
Put you on the spot here.
Yeah, the hell is.
Sorry.
It's not
Oh, unless you want to defer to the chief executive. Oh, no, actually, I'll give it to the chief executive. Since this is my first meeting with he's no longer acting. He's actually the chief executive. Congratulations. I think council made a good appointment, and I look forward to working with the chief executive.
Much appreciated.
So,
would you like me to open with that?
Yes, thank you.
Kia ora, te marino, kia whakapapa pauna mai te moana, hei warahi mā tātou I te rangi nei, araha atu, araha mai tātou I a tātou kantara. Kia ora.
Kia ora. Thank you. Now, apologies. I think we've got some apologies. Who have we got? Councillor Jonathan Arson, who I think is on a course, and we've got a couple of councillors online. Welcome to those online. I'm happy. Apologies. Do I have a seconder?
Yeah.
I think Mike got by a fingertip.
Only the quick and the dead.
Quick in the second. Right. Confirmation of the agenda. I think we'll just take it as outlined on the agenda. Are there any conflicts of declaration of interest for items of decision? There are none. Confirmation of the open minutes held on the 8th of December. Do I have a mover?
I'll move.
Thank you. Do I have a seconder? Thank you, Councillor Ash. All those in favour, please say aye.
Aye.
Carried. Next item is our refinancing of the debt, starting on page 9. And welcome. Oh, maybe Sue, you should. I've already met. I assume the finance. What's your official title? Sorry.
Finance and Risk Manager.
Finance and Risk Manager has been already introduced. The council.
I'm not sure if Amanda has presented before. This might be.
Next time. Welcome, Amanda.
Thank you. I'm Amanda Gentile, I'm Finance and Risk Manager. With you.
Yeah.
Thank you.
Yeah. So you can introduce your report on refinancing of debt and probably hand over to Alex to talk about it.
Hi everyone. We have $10 million of debt that is coming up to be refinanced at April 23. We are assuming that this debt is going to be taken over by entity A because it's related to Three Waters. PwC have some recommendations for us, so I'll hand over to Alex to talk about those.
Perfect, thank you. So look, you do have an outstanding tranche of borrowing through the local government funding agency that is expiring in pretty well exactly 1 month's time, so mid-April. That debt at the moment is related to Three Waters assets, and as per the current borrowing strategy and proposals by the National Transition Unit, it would be anticipated that debt will be assumed by entity A, assuming, and there's a lot of assumptions here, that the water services entities continue as expected from 1 July 2024. So there therefore is an election that you need to make around this borrowing ahead of that time. Our recommendation to you is to refinance that once again through the LGFA, the local government funding agency, which is by far and away your lowest form cost of borrowing, and to refinance that for a relatively short period of time. So the recommendation is to borrow that to a maturity period early in the new financial year, FY25. So that would be July, August 2024, at which point there is hopefully more clarity around whether the water services entity A and others will in fact come into existence, and exactly the methodology that the National Transition Unit and the DIA will have confirmed in terms of the transfer of that debt and the obligations of such to water services entity A. As it's currently proposed, they will meet those debt commitments that you currently have, i.e. they will meet the costs and they will meet the repayment or refinancing those from 1 July 2024. So essentially, the recommendation is that to buy a little bit of time here. So refinance this for just over a year, with the expectation that it will be assumed by water services entity A. Of course, I've used the word assumption a number of times there. If that doesn't happen, and there's a certain political party who has a view that this shouldn't or won't happen, the option to refinance it will then come up again. And the LGFA will be more than happy to refinance that for you. At that point in time, with greater clarity around what your balance sheet structure might look like, there would be another election that we would be making roughly this time next year around refinancing that debt and another $7 million borrowing tranche you have maturing April 2024 next year. At that time, with that clarity, decisions can again be made around the term and tenor of that borrowing and whose balance sheet it might be sitting on.
Difficult position.
Alex, obviously the new Minister of Local Government is considering a number of considerations, and as per them, he was interviewed last night on the news. He says, I'm still working through all various options. One of the potentials is a deferral. So if it was deferred for a year, what are the risks for council?
The risk to council if it was deferred would be limited in that the access that you have to the LGFA is highly unlikely to be impeded by changes to the proposed water service entities bill or otherwise. The LGFA are going to continue in existence which way. They have never failed to provide the funding required of councils. Demand for high quality investment opportunities that they are providing is still extremely strong. They are a domestic rated borrower, AA plus rated from a global international perspective. Their access to those funds to provide to you is exceptionally strong. So the risk would be limited in terms of inability to refinance. Where there would be risk for an election to be made is around the interest rate environment and the potential costs of that. The assumption at this point in time would be those costs are not going to be borne by you from 1 July 2024. Those costs are going to sit with water services entity A. If there is a deferral, then those costs will sit with you until that deferral date. And so that would be the risk and cost to you. The outlook for interest rates in the near term is certainly high. Interest rates are going to continue to move high. The OCR will move high. This is factored in terms of the borrowing rates that the LGFA will provide to you. The market has anticipated these further rate rises and movements. Of course, the market doesn't always get this right. Information changes, banks collapse over weekends, the market changes and moves. And so there is that risk to that. For simplicity's sake, we would suggest that you borrow this as a fixed rate borrowing tranche for a little over 1 year. To mitigate your risk of interest rates rising further in the near term, that would be the recommendation. Borrow it fixed, have the certainty over what that cost is, rather than leaving this as a floating rate borrowing tranche and potentially continue to see upside pressure on inflation and interest rates moving higher.
Any other questions? I've got a question on the screen.
Thank you through the chair. My question is, what are the what is the rationale, or I suppose the disadvantages of extending the interest expiry date if the entity or Waipuna Arangi, as it's called, will assume the costs of the refinancing? Just because I'm hearing what you're saying about if things don't go accordingly, or there's other political parties that don't want to borrow of it and it gets extended, then is the responsibility to extend not then on us to have to refinance and us wear the cost, as opposed to if we extend it longer and then if it happens, it happens, and if it doesn't, well, then we're safer? What's your thoughts on that?
Yeah, so the great part of being a member of the LGFA is that there's no execution cost to you. So there's no administrative cost or burden that's going to be borne by you by having to refinance multiple times. So in that way, extending shorter versus longer, there's not a transactional cost that you're going to have to assume. So that risk isn't there. Borrowing longer term now, and the LGFA does provide you that opportunity. You could borrow this debt through to the maximum tenor they offer, which is April 2037, which is 14 years, comes with a cost. If you're borrowing for that long, the longer you borrow, the greater certainty you have, the greater cost of premium there is associated with that. Our recommendation is that you don't pay for that premium and certainty for that extended tenor if you're not going to enjoy the benefits of having that certainty and that extended tenor.
Yeah, Councillor, thank you.
Thank you, through the chair. Two quick queries, more for the newbies, as clarity. But I would have understood that LGFA are government guaranteed anyway. Are they not?
No, they are not.
Interesting. The second query I have is actual liquidity ratio, 123. Can you just explain that, or that's Sue, but just so we've got, absolutely, I read that as being positive, but
Correct.
yeah.
Correct. That is a positive. So you've got two governors that ratio is relative to. So one is your liability management policy, which will require a liquidity ratio of 110%. I'll explain what that means shortly. And the other one is an LGFA borrowing covenant, which requires the similar 110% ratio. What that ratio represents is that you must have access to funds in terms of undrawn headroom and or cash and cash equivalents that are at a ratio of 1.1 times to your drawn external debt levels. So the fact that you're presenting a ratio of 123% says we have more than enough access to funds to meet our commitments and outgoing requirements, which is a positive.
Can I just why that's really important? You think council's got access to LGFA, right? Councils in 2008, before LGFA was born, there was one council. Anyone thought, oh, well, everyone's going to lend to a council. Alex is nodding his head. He might know the council. I certainly know it very well. It wasn't one of mine. They didn't have a access to the funds by way of their liquidity ratio wasn't adequate. They ended up paying 11%, 11.5%. Don't panic it. They weren't paying, everyone else was paying about between 7 and 8. So that was the extra margin that council had to borrow because all of a sudden they needed the cash. And 2008, there was a little bit of a liquidity crisis. And, while LGFA is there, that doesn't stop a liquidity crisis in 12 months happening, and that's why it's really important to maintain that. Councillor Ash, sorry, but I just thought while we're talking
No, no.
liquidity, I thought it was really.
Thank you.
Through the chair, I'm just trying to get my head around $10 million debt, which is coming up for refinancing. Is with a financial institution or is it with LG?
LGFA. GFA.
And
You know, sorry, you understand who LGFA is?
local government
Funding agency? Yeah.
agency? And what is the interest rate at the moment? And what is the interest rate offered if we fix it for a year?
It's right on the top of my head. The LGFA, I made this comment at the start, is your lowest cost form.
Yep.
You have other access and sources to capital. You could look to refinance this with a bank. They would provide you that $10 million in refinancing. It will be more expensive than what the LGFA provides you.
Mm-hmm.
The LGFA is a AA plus rated entity, which provides them benefits in terms of scale and size and pricing benefits that they pass on to you. So essentially, the LGFA will provide a 1 year cost of borrowing to you that is made up of two components. The first component is what we would call the wholesale interest rate. And that essentially is the market expectations of where the floating rate or the OCR will be over the next 1 year.
No.
That's completely observable. Market participant prices and benchmarks off that. Next component is what funding or your credit margin. And the LGFA on charges their costs plus a small margin to you. So they raise the funds on behalf of the collection of local councils. They may raise at a time 200 million. Your request is for 10 million of that 200. They would provide you their cost plus a small margin over and above that to reflect your credit profile being different to theirs. They are AA plus, you are unrated, pay 20 basis points over and above their borrowing costs.
I understand that. I would like you to at some point give some information on the relative cost if it's funded with the bank, because I guess, if Sue can correct me on that, what interest rate we are paying is humongous. I think it's more than 7%, which we are paying on that at the moment. Because floating is related to wholesale rates and wholesale rates are going up and up.
Can I also just ask Alex, right, or through Sue, you've also got a whole lot of swaps in place. Correct. So what swaps do is they actually lock your interest rate in. So maybe, Alex, that might be a segue into that.
Yeah.
Like all the options, yeah.
Yeah, that's right. So look, your current exposure to floating interest rates is in fact mitigated quite heavily by the interest rate swap portfolio that you have, which essentially provides fixed rate commitments to you. That weighted average fixed rate is around 4%, I believe. So whilst the floating rate is rising in line with the OCR and is now approximately 5%, you are fixed at 4% and you're not exposed to that floating rate rise. The LGFA will allow you 2 elections when you request the borrowing or the refinancing. Would you like to borrow from us on a floating interest rate basis or a fixed interest rate basis? Our recommendation at this point in time would be to borrow that on a fixed rate basis and have the certainty on that. Where your existing interest rate fixing profile allows, i.e. where you have capacity under your existing interest rate fixing swaps.
So you will provide those options to us. Okay, thank you.
Councillor Ron?
Mr. Chairman, through you, can I ask that when the assets are transferred, are the liabilities not transferred?
No. Look, the National Transition Unit for the DIA is currently undertaking what they're calling a roadshow, and they are going to all the councils around the country to discuss the debt transfer methodology that they have proposed. They have met with Sue and the team and others here already. What they are proposing is that for any council that has waters related debt in excess of 20 million, that they will put in place an agreement to commit to meeting those borrowing costs over a 5-year phase-in or transitional period. So the debt will stay on your balance sheet, whilst the assets will not, but you will have a commitment from the DIA that they will meet the interest cost obligations to that waters related debt.
So are you in effect saying that if we have additional costs in perhaps extending the loan, those costs are covered by another?
Correct.
So there is theoretically no disadvantage to the ratepayers in extending that loan and providing a measure of security against the probability of rising interest rates. And can I ask what effect you imagine if there is a change of government?
The refinancing cost between 15th of April 2023, when this current loan matures, and 1 July 2024 will be borne by you. Beyond that, as it's currently proposed and stands, the cost will not be borne by you. They will be borne by another. Where the change of government could occur, it's unclear as to exactly what those changes might entail and whether they will in fact propose a different debt transfer methodology. One would suggest that they have little to no time to put that in place.
Okay, obviously people have looked at this more closely than I have, but I have learned the hard way that nothing's ever so bad, it can't get worse. You have made a judgment call that errs on the optimistic rather than the pessimistic side. And so it entails perhaps more risk that might be averted, particularly in the long term, as if it does happen, the government picks up the costs of borrowing. If it doesn't happen, we've saved on the overall costs of borrowing over an extended period.
Yeah. Do you want to answer that, Alex?
Yeah. So how to best answer this? These are great questions, and I'm appreciating the interaction. The outlook at this stage is, as you say, assumptions based. 1 July 2024 is the date this all starts. There's a possibility that does not happen, and your question is related to how do we prepare for that eventuality? Would you or should you borrow that longer to protect or mitigate yourself from that eventuality and that date pushing out? You could, but I would say also that your access to further refinancing within 1 year is not going to be limited by these actions. The LGFA is going to be open for business. Banks will be open for business to provide an alternative to you. The total quantum of your refinancing in 2024 will be more than this 10. It is this 10 million. There's an additional 7 million that you have in April 24, so close to 17. In the context of LGFA's balance sheet and their annual refinancing commitments, that is very, very small. But LGFA refinances close to $1 billion a year.
Can I just help rephrase the question? Because I think I know where Councillor Ron's coming from. He's concerned about interest rates still going up, right? Now, you also this is I think I want to circle back to you. So you're recommending it be fixed, but at the moment I think haven't we got sufficient swap cover already or not? So that to me is, why are we fixing when we've already got swap cover, which actually locks in our existing interest rates? Just want to just unpack that for me.
Yeah, no, look,
that might then give some comfort to Councillor Ron and others.
Yeah, no, I agree, and I think maybe I briefly mentioned this to Councillor Ash, that where you have capacity under your existing fixed rate hedging profile would suggest simplicity and certainty by fixing it. That may not be the case given the existing fixed rate commitments that you have, and that may necessitate that this is borrowed on a floating interest rate basis. Notwithstanding, you're not therefore still taking on the risk of floating rates moving higher because you have interest rate swaps that provide that fixing. Either which way, you're going to get certainty. Either your swaps are already providing it,
yep,
you're going to borrow this on a fixed rate basis and have certainty.
Can I also just, I noticed I had a question on the screen. I haven't forgotten you, right? I think it's really important. I think maybe we won't talk about this in public excluded because I've got some intelligence which is not really fit for, public consumption about the deferral, what that actually means. But I think Alex has made a really, really good point about that you don't want to be having too much debt in relating to waters for a long period of time, because the proposal at the moment is that the new entity will be repaying that debt as soon as it falls due. So my recommendation, if I can make a suggestion, my approach would be put as much of your water debt to be repaid as early as possible, because I think there's going to be risk in having longer term debt that you're actually then relying on the new entity to repay that debt and also fund the interest. I can imagine Amanda and Sue's job is going to get significantly more complicated for the next 2 to 3 years with all that transition. And I think if we can keep it really simple, look, our debt expires August 2024, 10 million, your problem, right? Off our books. And while, and I don't want to say too much, my view is that the government will probably want to, those entities that are ready to go, they might actually proceed with, and there might be a lag for the rest of the country. Bearing in mind that water care is probably already, I just don't know the percentages, probably 80%, 90% of already the water assets and works to be done in entity A, that would be a significantly less, would be an easier transition than when you've actually got the country. So what you may, right? So, that to me is it's really hard at the moment, because all we're doing is relying on a crystal ball, some broad statements that have been made by government. We've got a water services bill, which has got lots of fish hooks in for councils. To me, there's huge uncertainty about the Crown, the three waters, which when you've got uncertainty, you've got high risk.
Hera, I don't know whether she has a question, but
yes, yeah. Have you got a?
Oh yeah, I did, but no, that was a really interesting discussion. I think it's really important that we continue the flow of ideas. So that's Katie Pai. Just a question for clarification. Did I just hear rightly that the debts to remain on our books and the entity will only cover the cost of interest?
Yeah, so just to clarify, so the proposal at the moment, nothing is locked in concrete, locked in stone, right, is that because of all the associated, if you've got excess of $20 million, you generally have got quite complex swaps and bits and pieces. So the entity has to, well, the National Transition Unit are going to recommend to the final process that your debt associated with the waters will get transferred to the new entity once that they will actually repay it when it falls due, rather than for you to actually receive cash on 1st of July. Say you've got broadly, make it easier on my brain, 30 million of water debt, but some of that debt might be due for repayment over the next 5 or 6 years. You don't want to be stuck with cash on 1 July of $30 million, and then you've then got to manage the interest and all the associated hedging instruments until that debt repays. So what they're saying is, well, we will pay the interest costs, but when that debt then falls due, we will repay it. So the obligation, I mean, I think there might be some issues of prudent benchmarks, etc., because you no longer have the income. So what that's going to mean, I don't. Yeah.
So through the chair, I just want to clarify, because I did meet with the NTU, and obviously Alex has had further clarification, because what they said to me at the time was they were looking at, if the debt was under 20 million, they'd be basically paying the debt out at that time to the council. So ours is over that at this time, and even we may find it difficult to get it under 40 million, and we've got 17 million due within the next year, basically. But so we're near the benchmark for being repaid. They said they would also take over our hedging. The issue for us, and it hasn't been clarified, and we only heard that from the NTU when they visited us, and it was only 2 weeks ago, was that what the debt will say on our books will affect our ratios and could actually restrict us borrowing more for items that we want to borrow for.
And that hasn't been, that's only their proposal at the moment. I think we need to just keep that in mind.
Through the chair, just clarification on that. What's the view of our funding agencies on this scenario, even if they don't have the crystal ball? LG.
Oh, LGFA, they're all over it I mean, to me, you've got more correspondence with LGFA than I do, but
Yeah, look, I think LGFA would love to support the new water service entities where they could. They're essentially providing the step funding to the sector already. There's a lot of sense in terms of continuing to provide that support to the sector, and they're actively involved and engaged in discussions with the NTU around how they can continue to support.
Yeah.
So just through the chair, the risk with that is we guarantee the loan, so we'd be guaranteeing NPGA. That's debt.
Yeah.
Okay. So which is a huge liability.
That's that, and because the security, because you're a guarantor, comes as a proportion of your rates. So I think there's a lot of work still to be done, and I think that's why I think there needs to be a deferral, because the amount of work in the technical space is significant. And we're only talking at the moment in terms of the financing. We've also got to do all this discussion over our, they potentially will be asking the councils to undertake the billings. At the moment, potentially they will be asking they'll be sending council for, as proposed, a bill for the stormwater, and you've got to recover that. There's issues around that the Auditor General has raised. And then you've got all the identification of stormwater assets, which stormwater assets are going to reside with the new entity and which are still going to remain with the council. So to me, it's a huge amount of work to be done, and no clarity.
Thank you,
Councillor Ron.
Mr. Chair. My concern is that the government is in the business of obtaining power, taking a macro view from the government of waters over the country. Kaipara is a very small province with its own unique advantages and disadvantages. And I think we must focus, and so I recommend this, on attention to what's best for Kaipara.
Yep.
Okay, and that's going to take a lot of driving to be heard. And I fear at the moment this is evolving into the consideration of people with a vested interest rather than the purity of just what's best for council, what's best for Kaipara.
Oh, thank you. I couldn't agree with you more.
Yeah.
Right?
I endorse the views of Councillor Ron. So I think the least risky part we should go for, where we are the least committed in terms of our commitment, financial commitment, because nobody has a crystal ball. We should not make a decision which we will repent later on.
So just to clarify, what's the process from here, right? The recommendation is recommends to council, right, that approves a fixed rate maturity as of April 23, but doesn't actually until August 2024.
Yeah.
So that's the recommendation. So the question, right, to me, with the information that we have in hand, does that actually pose collectively, because we've got to look at all risks, right? What is the least risk? What's the best outcome for the residents and ratepayers of Kaipara District Council?
Mr. Chair, thank you for all that clarification. I think that given we are talking about minimising our risk, the ability to have the debt repaid in August 2024 is the shortest term possible. I think that that's our right course, given all the uncertainty. And I think that in expressing my support for that recommendation, I think that we should also, on behalf of all of our ratepayers, just express the concern of the KDC about all of the uncertainty that is prevailed upon us. I mean, you know, I won't say it's tantamount to being a lucky dip, but certainly we're looking to mitigate as much risk as we can, but there is a real concern about the uncertainties that are out there.
Just agreeing mostly with the views of Councillor Mike, I would also like to know, which Councillor Ron pointed out earlier on, there will be a simultaneous transfer of assets and liabilities. So we should not exclude that possibility whereby we are not committed for 1 year and this happens before that.
So that's a really good quick question, Councillor Ash, the question. So I think the issue is if it was deferred a year, the strategy would be then to refinance just for another year. And that's quite, in terms of LGFA's capacity, based on their liquidity, it's a very low risk. I did some work for another council looking at, well, because they were nervous about being a guarantor. They were in that under the 20 million total, so they didn't have to be a guarantor. The amount of cash, and this was before COVID, available to LGFA was substantial. That's physical cash that they actually, as part of their treasury. Not only that, when you actually look what happened in COVID, there was a liquidity, not crisis, but a potential for LGFA not to be able to borrow because of what happened in the markets. The Reserve Bank basically enabled LGFA to piggyback on some other mechanisms to ensure that they actually had liquidity. So while LGFA is not government guaranteed, the government have a significant interest, well, Treasury and Reserve Bank have a significant interest to ensure that LGFA is liquid. So I would say the risk of LGFA being unable to refinance this in July, August next year would be exceedingly low. Not impossible, but exceedingly low. You would actually have the same risk even if you went to any other, you'd have a greater risk if you went to any other organisation, including a trading bank. Councillor Ron?
My concern there is the assumption that the financial institutions behind the Local Government Financing Act, etc., are all stable. We are entering into a position in which almost nothing is predictable. To me, if it were my business, I would be borrowing for longer than I need, accepting that it might be costing me a premium, but I'm going to be saving that in all probability in all the refinancing and management expenses preceding that position. And I would expect to be in a better position later on. But I do accept that you people are much more aware of the very relevant factors. That's just my input. Thank you.
Thank you. Thank you. Yeah. Alex does this every day of the week, right? And I used to manage treasury in a previous role, right? So to me, this is not quite second nature as it is to Alex. But if this was my, if I was Kaipara District Council, and it was my personal money, knowing what we know, I would actually be going with the recommendation. Because yes, there is a risk, but I think that the consequence of pushing it out longer term, my reading of the tea leaves, this will get, even if National get in, there will still be change. It will be pushed out to 1 or 2 years, but if you wanted greater certainty, you'd be pushing out to 5 years. And therefore that, in terms of what's being proposed, would create significantly more risk for council because of the uncertainty over that future debt repayment and the administrative cost for council going forward. Councillor Erin.
Thank you. Yeah, I just want to add my thoughts into the mix, but I basically agree with what you've just said. Thank you, Mr. Chair. That I think, yeah, the risk is more manageable if we go with the recommendation for all those reasons that you've actually stated. I don't need to repeat them.
Thank you. Yeah, and look, I don't disagree. Yeah, right. But the issue is, what we've got at the moment. We're actually balancing risk. Yep. That there's no such thing as a free lunch.
But look, I think the shorter term recommendation provides the flexibility to be agile to those changing environments. I mean, another measure that might provide some comfort is the rating agencies' credit rating that they ascribe the LGFA. So they ascribe 2 ratings, a short-term rating and a longer-term rating. The borrowing tenor that we're describing is going to be very close to falling into the short-term credit rating outlook. Since those ratings have been in place, no borrower with that rating has defaulted within that 12-month tenor. This is global. This is not a New Zealand context. This is a single A from Standard & Poor's, a single A1 plus borrower is not defaulted within a 12-month period.
Can I just also, my understanding is too, there are a number of significant New Zealand institutions that actually will actually lend to LGFA. And I think ACC is probably one of them. Right.
So I just commend that it's probably appropriate to think outside the financial implications, which tend to distract you to think in terms of what's best in the longer term for Kaipara.
I agree with that, but I would like to propose some clarification in A, whereby, because it's ambiguous, it approves a fixed to floating rate maturity profile, as noting that 37-60 month mix is out of policy, like 11%.
Yep.
Can someone explain to me about that?
Yep. Where you go, Alex?
Yes, I will, can and will. Your existing interest rate hedge portfolio has maturity dates that don't comply with your policy parameters. There are actions that we can take to amend that. However, we would feel that given the uncertainty, is taking risk on. Given also that these swap hedges are proposed to be assumed as part of the interest cost by the NTU, would propose and recommend leaving those as they stand today. Those hedges that are in place are protecting you and have protected you very well against the recent uplift in floating interest rates. So whilst it's out of policy, the decision to restructure at the moment to create an in-policy position would be taking risk around assumptions around how that transfer mechanism might occur.
Thank you, Mr. Chair. Just as an extension onto that, and I think if I'm reading Ash correctly, the specifics of this 11% outside that we are at the moment, no? We're outside the policy by 11%. So down the bottom there's a table we have.
Page 9 of the agenda. Sorry, Alex, you've got it. But Amanda, you can look over Amanda's shoulder. I'm sure she'll share it with you.
The 3 to 7 years, 25 to 85%,
Yep.
minimum cover to maximum cover, 24%. Is that saying that we should actually be at a factor of 13%?
Sorry, what pay, what?
Bottom of page 9 of the agenda.
Funding and
This
liquidity.
is what I
Yeah.
imagine you're referring to.
Yeah, so look, this page here, bottom of page 9, the table, you're out of policy in 2 out of the 3 parameters.
Yeah.
And essentially that is in regards to where your funding maturities need to be to ensure that you have adequate spreading of the refinancing risk. Given we have this uncertainty, given that as it is currently proposed that NTU and the DIA and the water service entity will assume your debt commitments from 1 July 2024, we're not recommending that you take action to try to correct that policy position when these debt and debt obligations in 12 months' time may not be your debt obligations.
But we should be at, instead of 24%, we should be at,
25 as a minimum.
oh, okay.
I was just trying to clarify on one part, out of $10 million, how much gonna be all, is it all floating now? Or you would retain the portion which is already fixed on?
Yeah, good question, Ash. Yep.
That is a really good question. It is all floating presently, and you have interest rate fixing instruments, the swaps that are mitigating that floating risk. What I would like to come back to the management team with is a specific and detailed strategy around the refinancing and the exact proportion of the fixed floating of this refinancing that takes into account existing traffic.
Yep, okay. Thank you. Right, I think we've had a good debate.
Thanks.
Right? Bit of a baptism by fire, Alex.
$10 million.
I know. That's yeah. Yeah. Right? Yeah. Right. Really good debate. Good questions. Actually, we really haven't had much debate, but lots of good questions. So we've got a recommendation there. I'm happy. Do I have a mover? Councillor Mike, do I have a seconder? Thank you, Councillor Ash. Any discussion on the recommendations? All those in favour, please say aye.
Aye.
Aye, those against, carried. Thank you. Good discussion. Probably took a little bit longer than I anticipated, but that's all right. The next item is our Treasury Management Report, so don't run away, Alex. All right.
I take that everybody has read the Treasury?
Yes.
Are there any queries?
No, I think we've almost had the debate.
Yeah.
I mean, just in terms of, sorry, Councillor Aaron.
Thank you. Sorry, trying to work on one device and look at everything. I'm just trying to find, I think it was in this report that I had a query. Yes, I did. There it is. I just had a query in regards to the interest-bearing deposit account at BNZ. Is it correct that the interest rate is 1.75%?
Have you got a page reference there?
It's page 4 of the Treasury Management Report document.
Of the actual reports, which is page 14
I don't know
of
what
the
that
agenda.
is.
So that is the interest rate on our on-call account, so our surplus funds
Yes.
that's in the bank.
Yeah.
So that's the on-call interest-bearing deposit.
Yep.
Yes.
Okay.
It is.
And is that negotiable between the council and the bank, or is that tied up with LGFA, or how does that? I know of another industry with on-call interest-bearing deposit, and that's quite a remarkably low interest rate in these times. I would have thought 1.75.
That would be the rate that's available at the time of the term deposit.
Well, was it a term deposit or was it the
It's not a
actual
term
on-call
deposit.
account?
Oh, yeah, the on-call account.
And hopefully the on-call account is a relatively low
Funds.
dollar value. You just haven't specified that in the report.
Well, sorry, through the chairs, 182 days, but not on call, 6 months.
Oh, that's right, yes, yep.
And I think it's fairly reasonable, because they're deposit rates, not borrowing rates. It's pretty good, yeah. Thank you.
Okay.
But we
Oh,
can
it's
check
not.
that.
Check that, yeah.
Through the chair.
We'll
We can
check
check that and come
yeah.
back to you.
Thank you.
And what
Yep.
actually, what the rates we're getting on deposit, when they were put on deposit and the on-call rates again.
Yeah, and how
Yeah,
much?
and with the on-call rate, perhaps how much is actually on there, because but that might make it make more sense. But I'm quite shocked that it's only 1.75% at this stage.
I think they're almost paying, 12 months ago, you almost had to pay them to take your money in terms of on-call. I know of other organisations that do an on-call as well, but it's probably not quite as secure as the BNZ. The other issue and I think it's really important, Alex, while we've got you here, on page 17 of the agenda, we've got some nice little interest rate position graphs, which I think your organisation produced. I can read them really, really quickly, but since you're here, would be an ideal opportunity to explain, what this actually really means in terms of being inside and outside of policy.
But these can be, a little bit confusing for the casual observer. So the chart on the table that sort of precedes that, this is around your funding maturity. So when you have the commitments to repay your funds, predominantly these are with the LGFA. The yellow bar on that chart is
page 15 of the agenda.
Is that the one?
The funding and the liquidity risk position.
Yep.
The funding and liquidity risk position.
Yeah, both.
Okay, so the funding and liquidity risk position chart, the orange bars are representing where you have funding maturities by year. So the intention is to spread and smooth those maturities so you don't have concentrations of significant amounts of refinancing in any one year. The table below is part of your liability management and treasury policy, which helps supports that spreading and smoothing behaviour as well. It's already been noted that there is an out of policy position there. The reason and rationale for that, given the prevailing uncertainty around the transfer mechanisms, noting the proposal. So no immediate recommendation to adjust that until more clarity is noted. The other chart that you will see is the interest rate risk timeline, that's what I'm calling it. And there's a lot of charts and shaded areas, lines and shaded areas on this. So I appreciate, again, this is not necessarily the most user-friendly observation. The red line on that chart represents your debt profile and forecast as we've previously understood it to be.
Yep.
That could, of course, be very, very different from 1 July 2024, given that that debt, to a large extent, may be assumed by entity A. The black lines are a proportion of that red line, and they represent your maximum and minimum interest rate fixing to that debt level. So you forward manage your interest rate risk. You project forward that you will have debt on your balance sheet. Given that you have that expectation, you have the ability to manage that ahead of time and create certainty to your plans and policies and budgets to help support your forecasting. And you do that through the use of interest rate swaps. The shaded area represents your interest rate fixing. What you're looking to achieve is a shaded area that is between those two black lines. Some interest rate fixing that is between your maximum and minimum allowable policy limit. Again, you will note this is not currently compliant with the policy parameters and limits. This can be amended. Again, the recommendation would not amend this at this time, given that these commitments may likely be assumed by Water Services Entity A as of 1 July 2024. There will be, and you made this point earlier, Chair, more hard work coming up for Sue and Amanda and the team in terms of managing potentially two different portfolios One, where the debt levels and the associated interest rate hedges are going to be assumed by Water Services Entity A over a 5-year phase-in as currently proposed. One where you have your core council debt that will continue to persist, as well as potentially grow depending on your capital programs and expenditures to date. And we will work closely to develop those two reporting and get a clear picture on what debt and obligations in fact reside with Water Services Entity A, what debt and obligations in fact reside with council, and how do we manage those both separately and differently on a forward-looking basis. So there is going to be an added level of complexity on a go-forward basis, but we are here to help.
Through the chair, just looking ahead, projection. If, how do I put this? I'm presuming that PwC will be absolutely linked arm in arm with us. And so if something materially changes, okay, October or November this year, and then falling into, you'll be right beside us in terms of making recommendations, and we still have the flexibility to move faster than these timelines are showing. Right? Good.
Yep.
So we've got agility.
Yep.
Cool.
Alex, how many councils do you actually look after? Right? Personally, you personally, I'm not your, right?
I have the exact number off the top of my head.
Roughly.
At least 15 to 20.
Right. So basically, now why I'm probably aware of this, all my other councils, right? I see the same profile, right? They've actually got the same strategy. Right. And I used to use PwC in a previous life. It wasn't PwC back then. And all I can give you assurance, councillor, that when the market changes, these guys are on the phone to Sue and Amanda or email, this is what's changed. This is your new strategy. And Alex is only one of a reasonably big team.
18.
Yeah.
Right? Happy with that.
Yeah, I mean, I just sort of, it's really important that we actually make sure that the council's getting best advice that it can.
This is complex and it's getting more complex.
Yeah.
Unfortunately.
Hence the need for agility.
Yes. Yeah. Yeah. And also, you know, while I used to do this for a council, there is no way I would be managing debt without a Treasury advisor, period, right? Even if you've only got a small amount of debt these days, because it's getting so complicated. Just giving assurance, you know, that I'm not supporting necessarily all councils need to go with PwC. Sorry, Alex, but this is not an ad for PwC. Don't take it as that. But to me, it's about having you actually have got to have comfort that you've actually got the right advisor. Right. I'm happy to move the recommendation, but continuing to note that we're outside of policy. I think we just need to reinforce that we are, I know we've got in the previous recommendation, right, in the previous resolution, but I think we still need to continue to note that we are outside of policy. Right, I've got to move, I'll move. Mike, thank you, Mike. All those in favour? Aye. Say aye. Thank you very much, Alex. You can stay if you want to, listen to the conversation, or you've got other places you need to be.
It's very nice to meet you all and appreciate having me here. Enjoy it.
And that coffee's still, yes, whenever you're passing, when I'm there.
Great, yeah, ships in the night, no, we all do that.
Yeah, all right. Okay, nice to see you again. Thank you.
Appreciate it.
Program on page 19.
Yes, Chair, this is we publish this every meeting, just to let people know what work is coming up and what we're looking for in agenda items. So it's nothing of interest, that really issues.
No issues, thank you.
Issues, yeah.
Any questions on the work program? This is on page,
Can we tell the item, Chair, like 3.1, 3.2 rather than the page number?
oh, sorry, yep, yep.
Because it has changed.
It is
So 3.3, yes, thank you, thank you. 3.3.
Thank you.
The work committee program.
Yep.
Two things.
Any questions, councillor Ash?
Oh, I haven't actually, sorry.
You haven't found it yet? Okay.
No, I found it, but I have on, leave it.
Yep, that's right.
It's quite a lot, so.
Yeah.
There is quite a lot, yep.
I reserve my comments.
Okay. Question I have, I've got 4 actually on this, sorry, Sue. One is, I know we're going to approve the annual external audit in our June meeting. But I wonder, can we just have an update as to where we are with, have we got a draft timetable from our auditors yet? Amanda's shaking, is nodding her head, yep. No, you can speak from there, it's all right.
We do, we have.
Oh, okay, sorry, Amanda, you will need to come up so the councillors online can hear you. Sorry, Erin.
We have our first interim walkthrough on the 27th of March for 2 weeks.
Yep.
Then a 4-week session from the 5th of June to the 3rd of July, and final the 14th of August through to the 18th of September.
Right, okay. So you actually received the engagement letter formally from them?
No, we are meeting with them for the first meeting this Friday.
Okay, all right.
Sorry, through the chair, just one quick curious about building consent authority on page 2 of 3 of the second. It says it's blank, and it's the committee will review and note the management letter from IANZ and ensure CE addresses the issues identified. It's 2 of 3, attachment 2 of the same thing. Do you know what I'm talking about?
Yes, I can see that. So through the chair, we've just had the building consent authority order.
Oh, yes.
This, about 3 months ago,
Yep.
of which the issues came to council, the last audit and risk.
Yep.
And I think we don't have another audit for another year. So that's the item that, yes, will come through, but it doesn't happen to be in any of this year.
So it will not be done for the whole year.
No, we haven't done, because we're exceptionally good, we
Yeah.
don't have to have an annual audit.
Yeah, right, okay.
But that would be,
That's right.
if I may, that would be scheduled probably for somewhere around.
I think they came last month, was about August.
Yes, so it'd be August 24.
Yes, thank you.
Yep. Any other questions? I've got one, and I'll throw, it's got Amanda's name against it, isn't it? Right, I'm not going to throw you under the bus on this one because I know insurance, I know we've got that scheduled for the December meeting. When the renewal's almost done by then, aren't they?
I'm not sure.
Yeah, I just say, yeah, and I think from memory that, well, no, yeah.
I think about November they get done, but they aren't, we don't have the information enough for this meeting.
I know, it's not about this meeting at all. What I'm saying is, I think this June or September meeting, because I was at a briefing, lost track, this month, can't remember, in Wellington with Aon, and the insurance market is rapidly changing. And no one should actually be surprised about that. It was already changing. It was hardening, which in the term means it's getting harder to actually get cover prior to the Auckland anniversary weather events. And who knows what's going to happen after what Gary has done. Right? So to me is, I think we might need a bit of a deeper dive into what's being proposed, and are we ensuring the right assets at the right price?
And are we vulnerable in any?
What are we ensuring? What aren't we ensuring? And is there more ability or less ability for council to take on more or lesser risk?
Okay, so you want that, I'm taking from that, you want that brought forward to the September meeting, so you've got,
September,
and we'll invite our Aon at that time.
Yep.
Okay.
And Aon, I think, would welcome it. Are you part of a LAS? In the group?
No.
Group? So you do it on your own?
I think we do.
Yeah, okay. The other one I had, we'll come on to the financial policies, that's fine. The other question I had is our risk management. We'll review the risk management framework. Are we actually doing that?
That's right. So not today.
Not today.
But the councillors have asked that they look at the strategy, and I thought that it's probably more appropriate to have a workshop on that to understand their risk appetite.
Yep. Maybe we can coordinate that when I'm sort of available. I think I think it's appropriate from now on that council looks at its risk framework and its risk appetite, and what it actually, how much risk is actually council willing to undertake to achieve its objectives. Yeah.
I'll schedule that in. Thank you.
Thank you. I'll talk to you afterwards. Thank you, Amanda, for that. So we've got any comments from our online members? No, all good. Thank you. We've got a recommendation that the audit risk and finance work program, we just note it. Do I move it for that?
I'll move that.
Thank you, Councillor Aaron. All right, Councillor Ron will second that. All those in favour, please say aye.
Aye.
Carry. Next item is 3.4, policies and bylaws update. Verena online, welcome.
Kia ora. Morena tātou. Through the chair, would you like me to start presenting?
Yes, please. So we'll take the report as read. If you've got any highlights or key information you want to present to the committee.
Thank you, Chair. Sorry, I'm just looking at another screen to make sure that I capture all the key points. So this is the standard regular update report to the Audit, Risk and Finance Committee about Council's policies and bylaws. So this will come to the committee every quarter. The process will be that every policy that is due, so it's a rolling report, every policy that is due in the 12 months from the report date onwards will be advised to the committee for visibility and to answer any questions and to clarify any issues. So that's the standard process for this reporting. Those policies are the council policies and the hybrid policies. So hybrid policies are those policies that are approved by our executive team, but due to their nature are of interest to the committee and should be reported through to committee for visibility purposes. So that's the standard part of the register. Any other interesting issues that arise will be reported on as well. This item talks to the freedom camping, which I'll talk to shortly, and any other matters. This particular report does conclude some of the audit and review work that I've been undertaking on the policy register over the last 4 months. And the review found that we have some policies. Review found that there are 4 policies that could be considered to be internal corporate operational policies as opposed to approved by council. So the item talks to those and asks the committee whether they want to consider converting those to internal corporate policies, operational policies. And I'm happy to take any questions on that. The other matters, just to talk to the 12-month rolling review update. There are quite a few of those items that are overdue for review. Some of those are in process, and the committee may be aware that the Hearings Commissioner policy is already progressing under review, as are the governance policies, but happy to take any questions on the table. And just to conclude my overview, just the report also notes that all of the financial and rates related policies will be reported to the council separately, so they're outside the remit of this particular policy update report because they are an integral part of the long-term plan process, and they'll be reported to you as part of that long-term plan process and or to council as required through that LTP project. So table 3 lists you those policies that won't be reported on to this committee as part of this report. And just a final matter, just noting that the report also talks about our community halls policy and the issues around potential freedom camping bylaw, and happy to take any questions on those. Thank you.
Okay. Yep. Okay. Councillor Ash.
Thank you for that. Thanks, Chair. And the first one, the table 2, number 1 item, mentions that the policy audit found no elective review date for Mangawhai endowment lands. Can I know when it was found, the audit?
Well, so the audit, when I say the audit, that was my work to assess the policy register and assess council, all of council's policies. So the word audit here is my QA work on this project. So when I looked into the system and the processes and the tables and the spreadsheets that had been held to report on these non-statutory elective policies, there was no elective review date allocated to the policy. Normally there's an elective review cycle allocated to each policy. This wasn't the case in this policy.
Sorry, I'm just wanting to know, when did you find out this policy audit?
I
Was it
started
this year or a year ago?
I progressed this work in approximately August last year.
So which means already spent a year, and now we says overdue, and we still want it overdue from 2020?
Through the chair, this is an elective policy. It has no statutory review cycle. So it was merely that my research found that it had not been, no review cycle had been applied to it. So we've retrospectively added a review cycle to it to ensure that it's brought to the relevant committee or council for review over time.
So through the chair, can I just clarify?
Yeah, thank you.
The MELA policy relates to the interest rate to be used on the MELA funds, and that is done normally in about May, June each year. So the intention is, Amanda's just started, she will have a look at the interest rate and clarify how we calculate it now, because it is quite old, and we want a clearer, easier way of calculating the interest rate. And once we've done the policy, we'll bring it to the next meeting.
Okay, thank you.
Thank you. Can I just seek some clarification? We've talked about the risk management policy and framework in the previous item. The questions these hybrid that we've got, and I'm particularly got close interest in the whistleblower policy and the fraud policy and sensitive expenditure. So what's the process that you see happening with this and the involvement of this committee? Can we just clarify that, please?
Through the chair, and I'm not sure I'm answering your question, so please do interject if I'm not. The sensitive expenditure policy has always been an internally approved policy in terms of the records that I have reviewed. Yep. So this was a policy that was approved. The first record that we have is 2017. I'm unaware of a previous policy on this matter. So that was an internally reviewed policy. The fraud policy is one of the policies that was, the fraud policy and the whistleblowing policies are two policies that are currently approved, reviewed and adopted by the council. And the fraud and the whistleblowing policy are two policies where staff have made an assessment that they could be considered internal executive team approved policies, and this item is asking whether the committee agrees with that or not.
Okay.
Yeah.
All right. So my personal view, and this is up to the committee, is I think while I'm happy that the board policy, whistleblower policy, and sensitive expenditure be reviewed and by the executive, I would anticipate that those three policies should actually come through this committee. My rationale for the fraud policy is that their fraud, what is the process when either an elected member or the chief executive has been accused, I use the word accused, right, unsustainably, right? What should be the procedure for that investigation? Now, that to me is a governance decision, and there should actually be visibility by certainly this committee and council over that process. The other one, in terms of sensitive expenditure does affect elected members. It does actually describe what is sensitive and what the procedure is for recording that, including elected members. And whistleblower policy, I think, is really important that there may be in the policy a role for elected members where they are concerned about behaviour or events or something, and therefore they should be aware of what is the procedure. So that's my rationale, and I would actually be really keen to see those ones come back through this committee. This is actually pretty consistent with other councils, the way they deal with that. That would be my recommendation.
May I ask a question and clarify on that matter? Yep. I just realised I haven't answered your question. My apologies. All three of these policies are labelled as hybrid policies in the sense that they will be reported. The intention is that they will be reported through to the committee for visibility. In their review, they will be updated. They will any concerns, any considerations of the committee can be taken into account. But ultimately, that the approval mechanism sits with the executive team. If the committee considers that that's not an appropriate mechanism for oversight of these policies, that is absolutely fine. Then it would be the recommendation that these policies would remain under the auspice of the council for review and adoption, or would be converted such. The sensitive expenditure policy is currently an internal policy. Yeah. So just wanted to clarify that those are two options. Those three policies will be reported to the committee for input and feedback. However, they would remain to be approved by the ET, or they can be council policies.
My personal view is they should be council, because of, that actually then ensures visibility. It's not saying is that the executive shouldn't develop and bring recommendations, absolutely not. And, that to me is what I would anticipate, that the executive should actually look at it, bring it here for our review, and then go straight to council for their formal sign-off. Mr. Chief Executive, you got a comment?
So through you, Mr. Chair, thank you. Look, no problem with that. That's fine.
I don't want to create extra work, but I think to me it's actually about visibility by elected members and also the community. Also, why you don't have Audit New Zealand, I know Audit New Zealand bring this up in other management letters where the policies haven't been adopted by council.
Mm-hmm. Oh, that's fine. We can adjust.
Yep.
Through the chair, may I ask that the existing policies of whistleblowing and fraud be emailed to us so that we can have a read of that?
I've got no problem with that, but what I'm suggesting in terms of process is that executive, before we actually pick it apart, executive should actually have a good review, and they would be recommending it to us just to shortcut the process.
Thank you.
Yep. Good.
Through your comment, I think that's a sensible idea. The previous government was charged with the responsibility of monitoring the position of council, and they overlooked the transition from, I'm not sure of the figures, of roughly 18 million to $80 million on the Mangawai wastewater scheme. And when they can overlook $60 million like that, it's a strong argument for bringing it back to strict level.
Yep. Right. Any other comments?
Take any break through the chair?
Sorry?
Any 5-minute break?
Thank you. I was actually going to do that at 11, but I can bring it forward and we just deal with this item.
Yes.
Yep. So what we're saying in terms of the recommendation, we approve the following as operational. No, I think whistleblower and fraud should come off that, that list. Sorry? Yes. So I'm happy to move the recommendation up as far as item open B and dot B, right? Not whistleblower and fraud to come off. I'm happy to move that. Do I have a seconder? Thank you, Councillor Ash. Oh, I think Ash got in slightly ahead, Councillor Aaron. All right, all those in favour, please say aye. Aye. And we'll adjourn. Thank you very much. We'll adjourn for 5 minutes. Thank you.
Thank you.
I was going to adjourn at 11.
Discussion with Alex, actually.
Oh, no, that Thank you.
Big ones online.
Right,
Very good.
we're back on board. Welcome back. As long as I can remember my PIN to get into my laptop. And the next item is Health and Safety Update 3.5 with Glenys Online. Welcome.
Good morning.
Dennis.
Nice to see you.
Thank you. Lovely to see you all as well. So just to give you...
We'll take
Sorry.
your report as read. Any highlights, any key issues, any updates since you wrote the report?
Really, it is business as usual for us. As I highlighted in the report, what we're really trying to do is make sure that health and safety is top of mind, both for our staff and also contractors and volunteers that do work across the Kaipara district. We're also trying to make sure that our health and safety systems are very user-friendly, and that at the back end that they report information where it needs to go to. So whether that be the parks team, whether it be the health and safety team, whether it be a manager, if there has been an incident on site. And we continue to do some work to ensure that council is meeting its obligations with regards to hazardous substances.
Thank you. Any questions of the committee?
Just to, if I may, through Chair, just to the point that you raised, in fact, at our briefing, should the heading always now include the words well-being, health, safety and well-being update?
Yeah. My personal view is absolutely. Yeah. I mean, I think that's actually a key. Right? You're actually jumping into my question, actually, because I think.
Sorry.
No, not at all. No, nice segue. That, to me, well-being of our staff is actually really important. Yep. Particularly with the environment that we're working in. So that to me is right. I actually like it because it's actually broader than just making sure that everyone is safe. But yep. No, Councillor Ash.
Yeah, thank you, Chair. I have an issue with well-being in terms of definition. How far you would like to have them well-being? Are you going into the private space of their health in gyms and all, or would you like to have just them safe and sound?
My personal view is that work is an important part of anyone's life. And if we can actually provide a good, sound well-being, right, we will actually get, and it sounds really like an accountant, we'll get the best value out of them, right? It's not actually, and to me, it's actually by looking after the person and their well-beings, you'll actually have a more engaged, and I wouldn't say happy staff, but that would be the focus, that we've actually got a staff that are actually respected and valued and enjoy coming to work. I know of organisations where well-being in the broader sense, from a work perspective, wasn't looked after, and my view, and they actually lost a significant number of staff, which actually causes the council a whole lot of risk and subsequent costs. So that's my view. It's not, look, and so we know someone has a personal event and it actually then does flow into their ability to do their job. I think we've got an obligation in terms of being a good employer to make sure that they have actually got the right support, although it might not be we might not actually be creating it. That's my personal view. Councillor Erin.
Thank you, Mr. Chair. Yeah, I just wanted to add to that the well-being of the staff is already something that the management team and our health and safety team are already involved in and looking after. If in the agenda, it's already there as the information that is around that well-being area. So I actually really like the idea of Councillor Howard actually adding it to the title of the report, just to reinforce how important well-being is in the health and safety area. It's already something that's being done. And yeah, like you say, Mr. Chair, in this day and age, I think that the awareness of well-being around staff and how that actually impacts the entire organisation is so well known and so used. I think it would just, I think it's a really great idea to actually bring it to the forefront and make it part of the title of health and safety as well, because that's all we're talking about. We're not talking about doing anything else with it. They're already doing that. That's not what we're saying.
Okay, I've got, all right, Mr. Chief, you got any comments to make?
Just one comment, if I could. There are two things that keep me awake at night, and that is our well-being of our people, and particularly linked to the aggression, which is talked about in the report.
Yep.
And the other one is Kaiwi Lakes and drowning. They're the two things that keep me awake.
I want to talk about the Kaiwi Lakes and drowning in a minute. Councillor Kanahara?
Oh, yeah, I just wanted to add in there that there's an all-encompassing Māori term for it, and it's called hauora.
Yep.
So that's just throwing that out
Thank
there
you.
as well, maybe for in the title.
Councillor Ron and Councillor Ash?
Through you, Tim, I just have a little bit of concern that it's shifting the responsibility totally away from the affected party to others. For example, I had a project in Auckland, and the complainant actually trespassed to get onto the premises, climbed over a 6-foot fence, came down in an unexpected position and struck a reinforcing bar. And I was fined $5,000, and there was no question of whether the other party had mitigated, had used due care, etc. And I just sort of feel that it's gone a little bit too far at times.
Look, I think, and that's part of the well-being, right? That actually people are actually responsible for their own actions. And I think that's really important, right? That we've actually got to go, can't rely on the system. We've got to go around with our eyes wide open and look. And now I think hopefully that's part of the culture, that we're actually self-aware of our risks. Right? And I totally agree. I think that's, gone too far. Councillor Ash?
The reason I pointed it and the reason I'm finishing it on, Chair, on the well-being is this well-being, health and safety. Health includes mental and physical well-being.
Yes.
This issue of well-being has been criticized, and the local government reforms use well-being so vastly that you have lost the meaning of well-being. So I would say we should try to, as a council, we should try to restrict our business and not try to change the world by big words. That's my opinion.
Thank you, Mr. Chair. And appreciate all the comments. I mean, I suggested this simply on the basis, it's a very simple basis, I think it's been canvassed, that, it's good employer, that's really what it is, and acknowledging that. There are all sorts of other things, it's a simple context. However, going back to the report, under contractor management, I do have a question. We have a number of Casey-led health and safety contractor observations, a lot big increases, it seems, in this latest period, in this October-December period. Can we understand what that's about? Are there issues coming up there?
No, there's not. What has happened is that we have we've changed the reporting structure for some of those observations, and now our staff members are using Safer.me, which is our health and safety repository system, and they're able to enter those observations directly into their phone. So previously that information was collated and reported outside of health and safety, but because it is coming through Safer.me, I'm able to report it and include it in this report. And that's one of the things that we're really trying to do with all of our business units. Look for areas where we can utilise our health and safety repository system, Say4Me, and use it in lots of different ways so that other parts of the business have access to a product that is in real time, that can be GPS located, it is time stamped, it is easy to use. We can have multiple partners accessing that information. But because the NTA observation does contain a health and safety component to it, that's why I've included it in this report. And that's why you see a jump. It's because we didn't have that in the previous quarter.
Thank you. Thank you.
Any other questions? Can I go back to the chair, what keeps the chief executive awake at night? Well, one of them anyway, right? The one that he's admitted, right? Kaiwi Lake's drowning. What is council's legal obligation, right? I know there might be a significant moral obligation, but what's council's legal obligation for that event? Is it a council workplace, right? And we know that's the, how far do we actually have to go? It's not a council swimming pool, which, right?
So through you, Mr. Chair, I'm going to defer to Glenys a little bit on this one to about the legal side of things. Yep. For me, it is a very much a moral obligation in that, you know, campground facility that they were managed. Most of there are day trippers that come in a lot.
Yep.
It's a lake. People drown, and we have a lot of, well, we have a high incidence of close calls, shall we say?
Mm-hmm.
And we've improved signage and all that sort of stuff. I just don't want drowning.
No, it's the last thing. Absolutely. Yeah.
But so, Glenys, maybe you can enlighten.
Absolutely. You know, council's primary duty of care is around the management of the domain, which of course includes the lake. And so what we need to do is we need to ensure that we have safe facilities for people to use, that we have appropriate signage, that we have ways to educate and support people around good decision making. And then if an event occurs, that we are able to respond to that appropriately and very quickly, and make sure that the key stakeholders are informed in real time. So although we may not be able to stop future incidents from occurring, what we're always striving to do is trying to reduce those as much as we possibly can. And that starts to move into our moral obligation. But from our health and safety obligations, it's about making sure that the facilities, the environment do not pose additional risks of harm. So how that translates then, to make sure that we've got really good, clear signage for people who may not be familiar with what the risks are with regards to swimming in a freshwater lake, where our buoyancy is much lower and there's a very big drop. And what we're constantly trying to do at council is really make sure that the information that we're providing to people is fit for purpose, that's appropriate, that's timely. And then on the other side of it, we're always trying to make sure that the environment in which people are accessing the lake, we're not adding in any way inadvertently additional risks of harm, and that we can do very quick and speedy reporting so that those people within council who need to know if an event has occurred, that event is notified to them very quickly and timely, and they're kept up to date. And then in turn that we come back and we review our practices and our processes if there is an event, to make sure that actually it's working the way that we intend it to. So we're doing a constant sort of review cycle to make sure that what we think is happening the way that we intend it to.
Okay, thank you for that. My last question, if I'll carry on, and then I'll come back to, I'm pleased to see that you are monitoring contractors, and you've reported that. Thank you very much for that. The question I have is that I don't want to say random, right? But is there actually a process of ensuring regular reviews? There's actually a formal review. Look, just because you're out on site, check it, but is there actually an obligation to check 1 in 5 contractors, or is there some other formal process to actually do that? That would be just really helpful if you could clarify that.
Absolutely. So each of our contracts that we have with, whether they be big organisations or whether they be with, say, small voluntary groups, health and safety is always very implicit in terms of that contract. and that then states within that contract that whoever we are working with has an obligation to report any health and safety issues to us in a timely process. We then have a system where we follow up on that and make sure that that data is collected. And depending on the contract, there are either formal arrangements or there are informal arrangements. So if we look at, say, NTA, there are formal arrangements about the number of observations that need to take place in a particular period over a calendar month. And if we're talking about our smaller organizations, then that will be dependent on the risk level that's associated with the task that they're being entrusted to do.
Can I just rephrase the question?
Yeah.
So say I am a contractor, and I'm not, right? And I employ 10 staff, and I've got a health and safety, I tell you I've got a health and safety plan, and I provide you a copy with it. But does anyone actually actively going out and saying, is that health and safety plan actually being implemented? Do they actually check to make sure that that is actually being, what I said I was doing in terms of health and safety is actually being done on a basis of, pardon?
Physical audit.
Yeah, well, an audit of that. It doesn't have to be for every contractor, but what I'm nervous about, what keeps me awake at night, is a council says, yes, they said they had one, we took their word at it, but there was evidence in the community or from other things that they weren't always playing right by what they said they were doing. And is there a process for actually checking on that? Or I'm just nervous about the example in Auckland where there was a rubbish truck accident, that Auckland Council was found to have actually failed because they didn't check to make sure that the contractor was doing what they said they were doing. And that's the bit that worries me.
So if I could just respond to this. So what we do at KDC, it really starts at the point of the contract being written. And at that point, we are very clear about health and safety obligations and responsibilities on both sides. When a new contractor starts work for KDC, they go through a process of pre-qualification. For those organisations that are large enough and have used an external party, such as, say, SiteWise, we check to see if they have been acknowledged by another organisation around their health and safety prowess. So do they have an effective health and safety system? Is it what you would expect? Where those companies don't, then we do an internal check to make sure that they have the right credentials to be able to do the work that has been identified for them. And do they have evidence of a health and safety system? Then our project managers and our field staff spend time on site. So they would be reviewing the triple SP, so that would be the site-specific health and safety plan, to make sure that it is fit for purpose with the type of work that is being done. And then the health and safety team ensure that there's some assurance and verification that that process is working as we intend to. I do agree with your comment. This is an area of high risk for KDC, and that is something that we are constantly trying to review. So we're constantly looking at our process and making sure that actually the process is fit for purpose, and that we are looking for the areas where perhaps there could be gaps. So we have made some big changes around bringing on new contractors around our new supplier forms. I've worked a lot with the communities team and the parks team, where they're working with volunteers to make sure that the health and safety information is captured in a timely way. And you'll see that I made reference to that in terms of the volunteer group with Bailey's Beach. One of the things that we had identified was actually the information wasn't coming to us in a timely fashion. And we needed both health and safety information, but also monitoring information as per the contract that had been agreed for our parks team. So one of the things that we've been trialing is that we've taken a QR code, and what we've done is we've linked a number of forms associated with that QR code, so that the team at Bailey's Beach can simply use their mobile phone and supply the information that they're required to do really simply. So that's about doing a risk assessment before they go out and do some new work. That's about providing us with information about what changes have there been in the health and safety space. Have they brought on any new volunteers? Has anyone done any training? have they had any incidents when they've been out doing their volunteer work? And also it provides information to our parks team around monitoring. So one of the things that we're really trying to do in the health and safety space is take a very common sense approach to health and safety. So make sure that our paperwork and what we're requiring of people doing work for us doesn't get in the way of good practice, but actually can support good practice, and that they can report to us in a really easy format that's timely and can give us accurate information for us then to respond.
Thank you. Councillor, got a...
I do, thank you. I'm sorry, I've had my hand up for a little while now, Glenn. So we've kind of gone, sorry, what's...
I keep asking.
Oh, sorry, it was way back when you first started talking about the legal responsibility.
Okay.
The question. So it was a point of clarification around the drownings at Taharoa, and where you said, just before you said, now we're transitioning into the moral obligations, you said the last point was appropriately responding to the event. Can you elaborate on what you mean by that and explain that a little bit further? Appropriately responding to the event?
Yep.
Yes, absolutely. And really all I meant by that was that if we need to ensure that emergency services need to get to on site, that we've got people at the front gate so that they can shepherd them, so that there's no confusion about where the person is, that we've got people that are appropriately first aid trained, that we have an AED on site, that staff know how to use that it's charged up, that it's got all the appropriate equipment on place. And so really what I meant by that is just making sure that we can coordinate with anybody else that might be coming on site to ensure that if somebody has been harmed, that they can be either airlifted from that area or taken an ambulance from that area as quickly as possible, and that our staff don't cause any greater confusion around that.
And so just to make it crystal clear, so what you're saying is that there's no legal obligation to provide any lifesavers or any lifeguards, I should say, to patrol the lakes in the first place.
This is something that the team have explored and continue to explore. And one of the things that we do post an incidents is go back and review. So we do ask the question and challenge ourselves, have we done all that is reasonable? So we do, in fact, now have the equivalent of a life buoy that can be thrown out to somebody if they're in peril. They have explored whether or not we could get lifeguards on duty, but because of the location of the lakes themselves and the number of entry points that you can have, that hasn't been at this stage identified as something that's feasible. Just because you would be...
Sorry, so the drownings that we have had, was any of the factors that contributed to them things that we've introduced into the environment, such as the pontoon or the contracted paddle boards or kayaks or anything like that? Has that played a factor into it, or has it just been mainly that it's the difference between the saltwater and the freshwater that people, that people aren't aware of the buoyancy issues? Yeah, I guess.
So I can only comment on the last couple of incidents, so the ones that have happened really in this summer period. And my take on it would be that the incidents that have occurred have been because people haven't identified the full risk of what's entailed with swimming in fresh water. So it hasn't been something that the council has introduced. And in fact, the council has done an enormous amount of work around signage to make sure that it's very clear that people, as they go into the lake, are aware of the potentiality of what can happen. You don't have as much flotation. And I think it is just about people's inexperience of swimming in a lake that has led to people getting into peril.
Thank you for that. Yep.
Through the chair, yeah. I do appreciate your efforts, Glenys, in making everything safe, to the point that we are not engaging too much ratepayers' money on health and safety of a lake which is 24 hours. The campers can go in any time. You put a lifeguard, it's an unnecessary expense because we don't know the timing when somebody wanna play tricks on the water.
It's not ratepayers' money, by the way.
Sorry?
It's not ratepayers' money. It's only 40% as ratepayers' money, just.
No, let's not go in the specifics.
I think we're going down the wrong rabbit hole here, right? I think.
So my question was more to do with how far the ratepayers' money, it may be Kivy Lakes, it may be the roads, the extra contractors policing, how far we gonna go to make sure the other people are doing their job when they are paid to do their job. I think by law, the contractors have the obligation to follow the health and safety law. I am dead against policing. It could be once in a while, rather than the amount of effort council has put in monitoring the contractors is humongous. And if you put a financial figure on that, I would like to know how much money has been spent on that, which is not our job. Thank you.
Can I just clarify on that?
Yeah.
The issue for me is, as if we are employing a contractor, then we are the PCBU. We are legally responsible for their actions. We have to demonstrate that we have gained assurance that the contractor is adhering to the plan that they actually gave it to us. We can't contract out of that. That's a legal obligation. If we don't do it, then we get fined an exorbitant amount of money. And the courts take a very dim view of council not providing health and safety.
With due respect to the chair, I just wanted to say how far you would like to. Would you like to pay 20 people monitoring 20 contractors on a daily basis?
No, not at all.
Okay.
No,
thank you.
I think the issue is, I think that Glenys has actually explained the process, and I'm happy with the current process. I'm not asking for any further work to be done in this space.
Thank you.
Okay.
Thank you.
All right, and I understand the Kaiwi Lakes issue. Right. Any other questions? So we've got a recommendation there that we note the health and safety update from 1 October to 31st of December. You happy to move? All right, do I have a seconder? I'll second. All those in favour, please say aye.
Aye.
It's carried. Next item is our quarterly financial update. Page, item 3.6. Take it as read. I think has council seen these figures before?
No, they haven't.
Okay, see. Take your report as read. Are there any highlights, further information?
We have the February report recently completed, which is a similar position.
Yep.
We did want to note that there are a number of costs that will be coming through due to the recent storm and weather events. So, such as sucking water out of properties in Mangawhai and storage ponds, as well as the solar waste dump.
Yep.
Everywhere.
Thank you. Yeah, I think, yeah. I'm not sure if people are aware, but I actually chair Wairoa's finance audit and risk committee meeting, and you think you've got problems.
Yes.
Excuse me, sorry, through the chair, did you just say sucking water out of people's properties in Mangawhai?
Yes.
I think, yes.
Why did, I wonder why council did that.
Can I clarify there? So
Yeah.
there were some issues in Sawaroff Drive, as an example, where the water has been coming up and blocking access to a subdivision across the road. And we pumped over 1 million litres of water to enable residents to have access to their houses, as an example.
So it wasn't actually off their individual properties, it was actually off the access road. Sorry?
An example.
There were some.
There were some.
To stop the water going into their house.
That's crazy, because we had people in Dargaville who had water blocking their driveways, and there was no office from council to pump water out of their properties. So I don't know, I'm just a bit confused as to why we council was pumping water out of people's private properties, but I digress.
Just to put some clarification on this, I mean, this was major. This was I mean, the CEO has mentioned a figure of 1 million litres off a street, you know, that was blocking access to a whole subdivision. In fact, I believe it was more like 1.2 million litres. This is not just isolated houses. This was a major subdivision, and at one
Just
stage,
clarify that.
at one stage, excuse me, I'm speaking, at one stage, there was no other access into the whole area. So that's where it all came about.
So you're describing an extreme example. They just confirmed that there were private houses who did have water pumped from their houses. So I'm more interested as to why that occurred, not the extreme example you're giving. Thank
Can
you.
I? Yeah, I think that's probably for a wider debate in terms of not the role. Sorry, it's I am not disagreeing. We shouldn't have the questions, but I don't think it's actually a role for this committee. I think it's a wider discussion. And I'm aware that other councils are looking at doing a review of a lessons learned or lessons observed of what could be done differently across their district in the foreseeable future. And maybe that's something the council might want to consider, where your concern absolutely can be taken on board.
Thank you.
Any other highlights?
No other highlights.
Right, thank you. Any questions? No. So do I have a mover for the recommendation of 3.6? I'll move. Do I have a second? Oh, Councillor Erin moved. Right, do I have yours? Right, you, Councillor Erin moved. I'll second. All those in favour, please say aye. Those against, carried. Next item, 3.7, our quarterly debtors report. Welcome, Christine.
You've got Marnie with me
Yeah.
today, so she doesn't have to talk from the back seat. I'll take the report as read.
Yep.
Thank you.
Any highlights? Any further information?
I really just wanted to seek the committee's advice as to whether it's helpful the way that we're comparing some annual movements across an annual basis, and sometimes it's more pertinent to do it on a quarterly basis. If we do that on a quarterly basis, we have the problem of when we run into the first report for the year, it just goes up. So I don't know what's meaningful to.
Yep.
I'm just noting that some of these look as though they've stayed steady or gone up, when in fact, if we look at what we did last quarter, we see a reduction. And I'm thinking specifically of the mortgagee area, where in fact it's actually dropped from, oh, well, that does show a drop, but the drop is actually more than what we're showing here. It's dropped from 140 properties down to 18, and it's dropped from a debt of $349,000 to 38. So we're not really showing that in this report because we didn't measure it against that. And same with Māori freehold land. There's been a lot more movement in that space than what this report is actually showing. Do you want the details? Is that a yes?
No, it's a I'm considering.
Okay.
You know, we don't want to sort of.
I don't want to load you up with all the details.
Yeah, I mean, I do like. This is my personal view and jumping in. I don't actually have the rate of arrears compared with 12 months ago.
Yeah.
I think that's invaluable because that for me is that trend analysis of saying where are we actually heading? And no, quarterly reporting does take a lot of work. And if we're starting to quarterly report, then the question I have is how far can you go back to actually generate those quarterly reports, so we've got some useful comparisons.
So we're doing this on a quarterly basis already?
You are? So if I said...
Quarter, I'm here doing this.
Yeah, no, yeah, that's quarter going forward, but do you have that information if I said what was the quarter result 12 months ago? You do?
Because that's what I do actually, well, we're showing you a year ago in some instances.
Yeah.
So we've got that. In some instances, yeah.
A quarterly, if you have the information, Christine, would be useful.
Okay.
I mean, because every time you send out a rates invoice, the amount of debt goes up and then you get the payment, you know?
Sorry, I'm talking about our arrears only.
Yeah.
Quarterly.
Oh, quarterly arrears, yep.
Yeah.
But that would be total arrears, including...
Current, no.
Not the current, excluding the current year. Okay.
Hmm.
Comments from the committee?
And through the chair, I don't think it makes much relevance if we have it required quarterly. It's more work, and it gives a not clear picture. So I'm happy with the yearly one.
Yeah. I just save you 3 hours a week.
We're doing is.
Yeah, yeah.
Right, okay,
I think so.
yep,
No, I think, I'm actually relatively happy. And you can quote me on that too, if you like.
it's recorded.
That's for, oh, sorry. Oh, yeah, questions?
Yes, if I may, Mr. Chair, just when we get to the likes of, is it page 51, page 2 of the report, the land rates debt profile by area, could we have one other table there with total,
Sure.
you know, just,
Yes, I think you do, yes, okay, that's fine. You do kind of get that from this first table.
yeah.
If you want it to be shown in this.
That's right, well, I just, you know, I mean, if it doesn't, I think that what it'll do is it'll show in a balanced way.
Yes.
You know, the relativity between, say, the Magatoroto, the Dark, you know, whatever the difference, you know, the variability is, that's all.
So yeah, I'll do that next time and you tell me if I'm on.
Yeah.
Thank you.
And thank you for the table showing the years as the percent of total outstanding penalties and excluding penalties, because that to me indicates that, you know, of the debt, you know, if we're looking at that table 2018-19, 1.47% of total rates is outstanding, but only 50 less, about 50%, right?
Yeah.
Is only rates. So it's actually the problem with penalties is the penalties accumulate every year. In that graph there, yeah, exactly. It just puts some clarity around that.
Yeah.
It just reinforces that graph that every 6 months more penalties go on.
Just a clarification through the chair, Christine, these charging orders, do they have any limitation in terms of time or?
No, so a charging order for rates will stay in perpetuity, whereas a normal charging order will end after 2 years.
Yeah, and they are on the title as well?
They are absolutely on the title.
Thank you.
Yeah.
Good.
Question on that ever favourite abandoned land. I know you've made some comments and you're making some good progress on it. So the last step in the process is actually selling the abandoned land.
That's where we're at. So we've actually just asked for some guidance from ET, but that was only just the other day, so we didn't need to see.
And I think, you know, that might actually create some political heat as well. So just I think the elected members need to be aware that, you know, it's not nice when council does it, but, you know, we don't start this process, we'll never get our money.
That's right.
Abandoned lands in a way they're much better than rating sales, because abandoned lands, people have walked away from them. They're not too politically, this is my opinion and my experience. People have walked away from them. We've tried as hard as possible to get people to come forward, and we've got people that want to buy these. A couple of them, we've got people saying we want to buy them.
My experience is that generally that's the case, but sometimes abandoned land will actually bring out relatives of the people who have actually, right, and they try to make a stake on the land and they don't, right?
Okay.
That's, you know, so just, that's when the political heat, I've seen it, right?
Through you, Mr. Chairman, has council got a facility that they can negotiate a reduction in the outstanding rates? The reason I ask this is I'm aware that when you get to a forced sale, you've almost predetermined that you're not going to get them any rate, and nor is the owner of the property going to get anywhere near value for the property. You usually have the marketing agent that's got basically a license to screw everybody.
So I think you're possibly thinking more along the rating sales side of things, not the abandoned land potentially, because there's nobody actually living in these properties. So rating sales are another kettle of fish. They're what the next move after a charging order has been on the property would be. That's far more political and a bigger decision. And when it comes to negotiating a reduction in rates, that's not a legal thing to do. So we've got policies, we've got remission policies we follow, or the law will give us provisions if, you know, if the chief executive agrees that there's no way that we can collect that previous arrears, that they can be written off, but it's a hard bar to pass.
Thank you. I am suggesting that's a self-defeating policy. Because it's probably ensuring that the vendor has no equity, he has no further control, and the market is only there if it's an absolute bargain. The marketing agents are usually only motivated to make the sale at any price whatsoever, because they're not suffering any loss.
So I think the key, sorry, Philip, yeah. The key for that sort of sale is that from a council's perspective, we really only want to get the rates paid and to get somebody in the property that will potentially pay them in future. You might be looking at a $40,000 or a $50,000 rates debt, in which case you are likely to get that from a sale no matter how cheap the property is in this market. So I don't know if I'm answering your question. I see you thinking.
I would just suggest that council should review that situation. I note your point, and it's probably right in the sense of getting a new ratepayer involved paying the rates, but that policy you have at the moment will almost ensure you get no rates at all from the outgoing vendor.
You want to clarify, Christine?
No, you do it.
Okay, so just clarification, rates, even after the rates will always stay on the land, even after a rating sale. Okay, so if I buy a piece of land, I know what I have to pay, because if I don't pay sufficient whenever it goes, that the rates will actually still sit. Still sit with the land. Okay, so
And are you saying that the rates are a first charge on the proceeds?
More than a first, no. They are legally not a first charge because the rates stay with the property. So if you were to buy a piece of land, for example, that had $40,000 of rates outstanding, and you paid $10,000, well, after commission and etc., the council might get $5,000, then you would still be left with the remainder of the rates as an individual.
So as a new owner.
As a new owner, absolutely.
Okay.
So through the chair, just to clarify as well, that could happen in a rating sale situation. An abandoned land sale is different.
Correct.
Where the legislation allows us, and we would, write off any outstanding debt. So say we've got $45,000 owing on a piece of dirt, and we get, say, the reserves $2,000.
Yep.
It sells for $2,000. We'll write the remaining off so that the new owner starts with a fresh plate.
Yeah. That's for abandoned land.
Abandoned land is different.
Can I say something to the chair? So in a lot of those abandoned lands, they're just slivers of land that the solicitor forgot to sell at the time.
Yeah.
There's no houses on them for abandoned land. It's not people's houses, it's abandoned, it's overgrown. We have to take pictures and we have to prove it through, a judge has to approve that it's not lived on and no one.
And also, sorry, just adding to that, and we also are required by legislation, but we've done it anyway, to ensure that they weren't multi-freehold land previous.
Yep.
So that we've confirmed that all of the ones that we've got on the books at the moment were not multi-freehold land previously, so we're not alienating that.
Yep. And I think, should it be fortuitous that you actually get more than for abandoned land, the council can't keep the proceeds.
No, it goes to the public trust.
Oh, does it? Okay.
Yeah.
Yeah. Okay.
And they never know what to do with it.
No.
So,
It goes to, ultimately went to the consolidated fund, ultimately, after so many years that they've had it. So right now, just in terms of process, my understanding is, and correct me if I'm wrong, if this council wanted to do a rating sale, you would have to bring that to council. You don't have delegation to do that, or you do, or the chief executive does. Might be clarification, because I know.
Might clarify that, yeah.
Yeah, I know in some cases, because it involves the High Court, the chief executive doesn't have delegated authority. In other cases, it might be just useful. Just to provide assurance to councillors that, you don't want a surprise on the front page.
No. Thank you.
Right, thank you. Any further questions? All right, we've got a recommendation there. Do I have a mover?
I'll move.
Thank you. Do I have a seconder? Thank you, councillor Aaron. All those in favour, please say aye.
Aye.
Carry. Our 3.8, our regulatory compliance update. Thank you, Sue.
Yes, the key things to note are building consents and resource consents are down on the 100%. However, we're still doing really well because we're in the mid-90s. But you can see that we're actually starting to, the number of consents for both building and resource consents is reduced on the last couple of years. So that's a reflection, I think, of that economic situation. The other key thing to point out is about Kaihu raw water and the fact that there's only 2 left to sort through. So I understand that the tanks are in place now and we're looking at stopping the water. So we've got 2 still to resolve. Okay. Yeah, that's really, and everything else that.
Thank you.
Through the chair, can you please allude to that Kahu thing, the river water store? Is it storage or what is it?
So it's a number of, it started off, I think about 18 households we found were connected to our raw water.
Yeah.
The raw water pipe, which obviously is not potable water. So it was council's obligation to get them off that. In the meantime, council decided at the time they'd provide potable water for drinking by way of bottled water. So that's been going on for the last 5 years at a huge cost. We started off by notifying the people that lived in the houses that the water wasn't potable and that they should have a tank. And a number of people at that stage put in tanks. Then council, the remaining numbers, I think it was about 7 after that, came to council and council agreed that we'd could loan the money, but understood that it was Murray land. So therefore you can't put a charging order on it at that stage. And so we relied on people's honesty, and I think about 3 or 4 people took us up on that to have the loan. And we tried before that to get grants for the people that lived there. So, but only recently, and this is in the last year, we tried again for grants because a lot of people said even having a loan was a real hardship for them. And I think it was through NRC had just developed a new fund for those individual people who, households that may not be connected to potable water. So at that stage, there's been another probably 4 people that have been able to, or maybe it's 150,000, so it might even be more than that because you're working on about 20,000 per household to install a tank. So we were able to get grants for up to 6 or 7 people, and then we're left with 2, one with an asbestos roof, and we're looking at the solutions, potential solutions for that, and the other person has refused.
Okay, that's good. Are we still providing them potable water or?
We are, but we're considering, just for these 2 households, but we're considering what we do, and there'll be a paper coming to council.
Good.
But this has taken 5 years.
The waste.
Welcome. Yeah, the council person.
Yeah.
Welcome to our responsibilities, councillor. Question I have, Paparara wastewater solutions in progress. I don't want you to right. You're saying you're going to put 50,000 in the 23-24 year, but what happens subsequently with the new entity district?
So the new entity has been advised by our group manager infrastructure that I think it's 16 million should be put in the budget for the next 10 years for a plant for Paparoa.
Right, okay. Right, see what happens. Right. Okay, so any further questions?
All good.
Can I'm happy to move the recommendation. Do I have a seconder? Thank you, councillor Ash. All those in favour, please say aye.
Aye.
Past audit recommendations.
So this is just a copy of where we're going. We are, with our audit recommendations, we are completing them.
Yep.
And the last ones, we put in a Deloitte from the last meeting that was approved, but we haven't really looked at them and assessed them. The finance people haven't had time to do that because we've been so involved with Three Waters and also the latest event. So I apologise that it's not quite complete. But you can see that staff members are completing the issues from previous audits. That's really what's important.
I don't just, okay.
Mr. Chair, may I add a couple of words, please? On page 1 there, consultants, consolidated consultant base, where we say has occurred to ensure a sustainable and reliable source of, I'd like to add the words, relevant and appropriately qualified consultants.
That one.
You may, Susan, you may say that it's implicit, but
It is implicit, but I mean, happy to add it. We're going through the process at the moment, and we've identified the areas they're in, whether it's landscape architects or resource consent planning people.
so you see that's good because you're talking about specific areas.
Yes.
And I'm putting that in relative to generalists. Okay.
Yep. Thank you. Just a note, so just to prove I read the agenda in detail, I think you've got some dates that are well past their due date, isn't it?
Okay, you just have to follow those up with
I'm not asking you to, right?
With the relevant people.
Yeah.
Okay, thank you.
And the question I have too is, I know we've got some stuff that's now scheduled for finishing in June 23, and I just wonder whether that's actually achievable with the amount of work that's actually going on at the moment. So I'm not expecting, I don't want to break the organisation, but I think we probably need just to look at those estimated completion dates. Are they actually realistic? That'd be my only comment. Thank you, Sue. No further questions?
No.
All right. Do I have a mover for the recommendation, please?
I'll move.
Thank you. Councillor Mike, seconded. Thank you, Councillor Aaron. All those in favour, please say aye.
Aye.
Carried. Can I have a mover to move into public excluded?
Ash.
Thank you, Councillor Ash, seconded Councillor Aaron. All those in favour, please say aye.
Aye.
And we'll take 30 seconds to stop the record.